Okay, we're in business. Here I am. Perfect. Give you a little opportunity to read through our risk warning here. But again, the general idea here is we're not going to go into massive depth, but it's a 20-minute webinar. Hopefully it gives you some of the key points for trading this week. It's predominantly a charting orientated webinar. We're going to cover some of the sort of main issues potentially in the news and things as well, just quickly at the start. Any questions on the news or on charts, just feel free to let me know at any point in the webinar. I'm happy to chat about those. Trust that should be about right. So the UK election's been and gone, so I've actually removed that from my big theme. Still is obviously kind of playing out in markets to some extent, but now it's more in the context of Brexit. Obviously we're without a majority government going into the Brexit negotiations as they start today. David Davis is just arriving in the EU as we speak. Looks like all pleasantries on screen, but and I'm sure it's all very pleasant discussions, but behind it all, politically the EU don't want the UK to have a good deal, in my opinion. And even though economically it would make sense for them to make it as smooth as possible, it's probably not going to pan out that way. So that's all got implications for the pound, but it's all a bit long-term horizon stuff. I only mention it because, as I said, the UK election's been and gone now. You know, now the question is, does the government pursue a quote-unquote soft Brexit or softer Brexit? To me, it's there's really little choice about what to pursue here if you're going to respect the result of the referendum in any sense of the word. Because the EU have been very categoric, which understandable. That's the rules they have in place. It's open borders, and open trade. Yes, if you want something akin to the open trade, you need the open borders. And so, obviously we're hoping for something outside of the single market, but as close to it as possible. But I suspect it's not going to be nearly as free a trade as we're used to. So again, that's all a big long-term pan out for there. We'll certainly look at the pound charts as we go. Relating to all that, almost more important than Brexit and the election was last week. We obviously had the Bank of England. Didn't change anything as everybody expected, but it was quite surprising they had three hawks. And so Mark Carney has a speech on Tuesday, so I think that could be significant for the pound. I would guess that, given that Mark Carney is not one of the people voting for a rate hike at this point, I would suspect he probably tries to dampen down some of that hawkish expectation that came out of that meeting last week. So if he talked very dovishly about the economy, the implications of so it's hard to say that, so the bank's official projection is for inflation to rise around 3%, inflation to pick up, CPI inflation to pick up around 3%. 3% inflation, that really does need a rate hike, but it depends how he addresses that. If he coats it in uncertainty about the economy, that gives them some more room to not lift rates for so long. I would imagine that Carney is trying to get, in effect, a negative reaction in the pound this week through his speech on Tuesday. We could get a sell-off on Tuesday, maybe Wednesday, but then I suspect that overall the market's beginning to understand now that the Bank of England is shifting, we're closer to a rate hike than we've been really since the financial crisis, and that deserves for the pound to go higher. So we're sticking with our general viewpoint that the pound is on an upward track, but obviously it's a choppy road. ECB minutes, they're probably not going to be a massive deal in that the ECB is still denying any plans for tapering QE. So I don't imagine they will have a huge impact on the market. Then beyond that, data this week pretty sparse. We've got the European services and manufacturing PMIs on Friday. Would imagine that would continue the general positive bias in European economic data, which is generally a positive for the euro, a positive for European stocks as well, because there have been a lot of institutional flows going into European stocks, hence we're seeing the DAX at record highs, seeing the CAC push up into whatever it was, 6-year highs. So, it's actually proving to, sometimes there's a euro positive European indices, like with the big exporters, negative, like we see in the FTSE. That's not so much the case at the moment because there's a lot more optimism in Europe relative to the UK, where we've got Brexit, and to the US, where there's still the uncertainty around what Trump's going to do. Not much more development on the Donald. Who knows though what can crop up in the news. In terms of the big market moves, we're going to look at charts for this too. There's been an ongoing sell-off in oil, really since the OPEC meeting, and obviously the NASDAQ, which we trade as the US Tech 100, so that's the NASDAQ 100, had a big sell-off last week, so we want to see what the chances are of that continuing. And if it doesn't, maybe the Dow Jones, or even if it does, maybe the Dow Jones hits 21,500 for the first time. Right, moving swiftly on. Okay. So we're on a weekly chart for the euro here. Just useful to check in on this, I think, at least just once at the beginning of the week. You can see that we're in a very clear horizontal range. We're trending upwards in the short term, but we've bumped into this 113 level. And you can see this last week's candle where we bumped up to the top side, and then we bumped down to the bottom side, hit 113, hit 111.50, but just weren't able to sustain a breakout either way. So that is a candle showing uncertainty. The market is not quite ready to take out 113 yet. Equally, there's a lot of optimism. We're not really heading massively lower. So obviously, the closer we get up to the top of the range, I pinpoint 114.50 as a sort of round number that seems to be covering a lot of these peaks. As the kind of big resistance that we need to move through. 115 really, but I think 114.15 we're probably doing it. We had a bullish engulfing candlestick here. That was followed by just an inside week and then the uncertain week. So we tried to break out to the top side from the inside week and the bottom side, and we failed. So again, we're not getting the breakout yet. We're overbought on an RSI basis, but then you always are when it's when you're pushing into an uptrend. My take on it at the moment is that, well, if we get a pattern on the daily chart dictating a breakout to the top side, then we have to accept it. But I think almost a better trading opportunity would be if we actually get a drop back down to the sort of 110 vicinity, because that big round number could generate some long-term buying interest, and then then we're able to buy the dip. So just if I drop down to the daily chart, we can see this in a bit more granular detail. This was the false breakout, narrowly missing 113, and then we tried to take out 111.50, and we popped up on Friday. So we're in the middle of the range right now. So at the moment, not too much obvious direction from the euro, only as to say that the this general tract has been to the top side, and we're just looking for a break higher or for a move lower to then be able to buy into. My take is that the way I go about my trading is that the trend seems to me quite clearly up, so I would be less comfortable about selling the market short, but clearly if you were able to and the market did fall down to 110, we're looking at 200 pips from current levels, and it's a fairly, if you are more aggressive and think that we have put in a bit of a top for the time being, it's fairly categorical where people are going to be placing their stops. It's going to be above these highs, above 113. Because again, above there, we're looking at more like a breakout to the top side, so the short would be kind of nullified there. Move on to cable. So again, a bit of a tricky one. We had the break lower after the election, found support at, if I get to the weekly chart, get a bit more context. So obviously, big bullish break to the top side. We're retracing some of that bullish break at the moment, in my opinion, and it looks like we found some support on these weekly moving averages, the 20 and the 50, congregating in that 126.50 area, and that was a nice one in terms of, if I just zoom in a bit, these peaks through here all kind of covered that 126.50. So I initially thought we might dip a bit lower into this range, maybe down to this peak here, but we haven't so far. It's been an inside week, so we have to see how we can do in the early days of this week. Can we push and break out of the inside week, that would be bullish for another test of 130. And again, a bit more granular detail on the daily chart. This is the break lower, but we've pushed back through the break area again, and obviously there has been clearly some selling from the previous low, from the 128 level, but it hasn't managed to get us too much lower. So you know, it's looking quite strong for sterling at the moment, and again, with the backdrop of the Bank of England turning more hawkish, you know, that's another reason to think that maybe we put in the lows here at 126.50. Again, if Carney does come out super dovish, we'll have to see what happens, obviously, but that could present an opportunity if we push into this range somewhere. Obviously, we have better opportunities than if we're like buying up here. Now, I actually just did a snapshot on the dollar yen today, so I'm not going to go into too much detail on this because I'm just going to be repeating myself. I'd encourage you to, that video should be ready in maybe a couple of hours or so, and that will be on our YouTube channel too. Cannot see the chart. Oh, okay, sorry. Yeah, shall I? It's a bit inconsistent. Shall I just flip this to white in the middle of the webinar? How is that for everyone? Is that better, clearer? Okay, all right, good, fair enough. Right, so as again, check out the snapshot video, but the general take here is we're on a weekly chart. We've had two hammer-like patterns here off 109, which is also the 50% of this big move higher here. So at the moment, you know, we've held it once, we've held it twice, you know, potentially a double bottom manifesting here with some strong weekly price action. And on the daily chart, it looks encouraging. We're pushing above the 20 period moving average. We've held this previous high, and we're just heading up into the 50 and the 200 up here. So again, if you're kind of thinking of this being a sort of trend, you know, there is no particularly nice trend line, but if you think of this as being the kind of correction, it looks like we're broken out of it. So the UK 100, you know, I actually tweeted out, have we put in, you know, is this a head and shoulders, is this a head and shoulders pattern? Here's the left shoulder, here's the head, and here's the right shoulder. So I tweeted it after this rejection here. We went right down to what would basically be a neckline, but we bounced dramatically up again as of Friday, and we pushed higher early today, and we're kind of rejecting this same. You know, if you use the closing levels, you can kind of see what's going on here, right? It's all kind of in basically the vicinity of the 7500. You could basically say is the neckline of this pattern. So we're having another drop back from it today. You know, if this turns into a decent bearish pattern, that's going to be a double failure on the right-hand side. You know, it's going to be more confident that the pattern plays out. But really, we haven't had a close below the neckline down here yet. And actually, you know, this is a big bullish pattern here. So, you know, you've got to assume that probably the market's holding its general bullish trend. And we're just in a consolidation phase at the moment. And there's probably a good chance that we push above the neckline eventually and at least retest the highs. So again, it's one of those where it looked like a bearish pattern was developing, but you know, stock markets are in such a bull market that you know, it's hard for them to ever actually come off. Looking a lot more solid in the Germany 30. This is the daily chart. Don't really need to go out to the weekly chart at this point, just because it's such a clear uptrend. We're in record high territory, and we're just struggling a bit at the 12,900 mark. But it looks like we're set for a breakout, maybe even this week. We've been in a horizontal range. So selling the top of this range has worked 4 times. But you know, eventually this level, I think, you know, look, probabilities would suggest we're hugging this 50-day moving average so nicely. We haven't even got to it, but still the market's looking quite strong. And I think, yeah, as I said, I think the economic data from Europe has been good. There's more investor confidence around Europe. You know, there's been a couple of successful bank bail-ins, bailouts rather, bail-in slash bailout. So there's not that financial crisis looming around the corner perhaps, while interest rates are low, so investors kind of shifting into Europe. So yeah, Wall Street, you mentioned the Dow Jones could hit 21,500, quite another big marker potentially this week. It's pushing into record highs over the last few days. It had been a laggard, while it was in this territory, the S&P 500 and the Nasdaq were making new highs. Now, as we're about to see in a second, the Nasdaq is kind of lingering below its high as well. There's been basically a rotation out of some of the high-performing tech stocks into some of the more of the industrial names, perhaps with a sense that Donald has weathered a lot of the storm around impeachment, and maybe some of the kind of big industrials that his policies would benefit stand to benefit a bit more as we go into the middle of the year. Here is that Nasdaq US Tech 100 as we trade it. Quite clear technicals at the moment. This 50-day moving average and the 21 for the more steady uptrend. We've been holding above the, probably holding above the 10-period moving average most of the time. And then whenever we do get a bit of a correction, we tend to test the 50 and then move on again. So tested the 20 there. Looked like dramatic sell-off. Oh my goodness, is that a sell-off? Is that the top? No, we just bounced straight back. So another big sell-off here. We did find resistance at the 20. We're back at the 50 again. But if we take out the 20 for a second time, odds on we're in for another one of these situations where it's just a dip that people buy into. So certainly some signs of weakness here, but I think it's just, you get what's been happening is that there's such low volatility and people are just buying into these big profitable companies like Google and Amazon, etc. And then occasionally, because the valuations are so lofty, when there was a bit of a market sell-off, people take profits on their on their best positions, which tend to be all these big tech stocks. So they're the ones they suddenly dramatically sell off. You get kind of these events sell off, but they just end up being dip buying opportunities. So this is certainly one of the bigger ones. So it will certainly be a test of confidence, but I would be surprised if we don't go up and at least test the highs again. Now I've got a little arrow here because I'm not against the idea of trying to fade the market around the highs, depending on the, I wouldn't probably put a limit order there, but to see what the candle action's like. If it looks like some orders, big orders are selling short the market, who are us to get in the way? I mentioned crude oil at the start. I also mentioned in our week ahead video, which I'd encourage you to have a look at if you haven't already. We basically, we found support at the previous low, which was obviously a strong reaction from that 47 level. So understandably, there's still some, basically when you see a large wick and a big a big down day, and then suddenly the market flies higher, what's going on there physically is that there's just more buy orders than sell orders. So the market makers have to send the market higher for the buyers to get into the market, and there just aren't the willing sellers there. So buyers have completely taken over. So the logic is, if we pushed away from the level that quickly, there's probably still people who want to buy in at the market at that level. Obviously, we've been quite fast since, but those who couldn't buy in at 47 when they wanted to because the market moved so far away, they're trying to now. Hence, we're getting a bit of a positive reaction again. But based on these trend lines, it looks to me like perhaps we do want to take out 47 here, and based off these peaks, the market's kind of trending lower. Moving averages are heading lower. The risk is that we've hit this big level that probably has some resting orders, and that has been the nature of this downtrend. Has been downtrend, sharp uptrend, downtrend, sharp. So it's been kind of a rangy downtrend. So if this level does hold, then we could be looking right back up to $54 a barrel again, because it's just going to be that same rangy downtrend. So I've certainly got a downward bias on Brent. especially in the context of it being such a negative reaction to OPEC, but you've got to acknowledge that it's not a very aggressive downtrend at the moment, where if you pull out into the weekly chart, you know, we're still gradually trending upwards, you could say. I would say this is probably notable though. You know, we're taking out this kind of 45 level, which had been support a few times in RSI. Sometimes RSI can precede price. And last but not least, gold. So here's the thing with gold. We basically had a failed breakout of this long down. Let me pull out to the weekly chart. I had this downtrend through here. We had a false breakout. Ended the week lower. That was very bearish. Then, so I pointed that out a couple of weeks ago in our webinar, said that was bearish. We got a bounce back to the trend line itself, thereabouts, and then again, a lot of selling orders coming in here, ending the day lower. That was a very bearish pattern right there, and we've had it lower since. But, and then here's an inside day. So potentially we're breaking down through an inside day, so that's an inside day breakout. But you've got to figure that it's 1250, the big 1250 round number here. So I'm hesitant to believe the market is still going to head lower from the 1250 mark. I think there's scope for a bounce. If we do break 1250, then I think we're probably heading to this rising trend line here. But ultimately, we've just kind of softened at this old level. But the trend is still meandering higher, so a little bit tough to call here. I think what would be actually like a nice setup is if we got a false break to the downside of this inside day and then we close the market positively. That would actually be a positive pattern to feel more bullish on the market. Equally, if we close below 1250, I think that's a good sellish pattern. So a bit of a kind of pivot point here on gold. What's ultimately driving gold? I think we're just pulling out of havens at the moment. There's not as much political risk as there was, and there was quite a strong dollar reaction to the Fed last week. So the Fed look like they're gearing up for a rate hike in September. That's positive for the dollar. Especially in the context of the US economy not being all that strong. It's almost like the Fed are on a set path now. So they're almost, unless the economy completely falls apart, they look like they're intent on raising rates. And not everyone thought that was the case before, because in the past there have been so many false moves from the Fed, saying they're going to go and then getting thrown out of it by political risk. But again, there isn't that political risk there anymore. So that's all a bit bearish for gold. So, potentially a turning point here. Potentially this strong sentiment that we've pretty much had all year with a few jitters along the way, maybe that's turning, but too early to say yet. Alright, so I'm going to call it a day there, guys. Thank you very much for attending. Sorry, I think we're a couple of minutes late starting in the end, so apologies for that, but I hope that was useful. And make sure to check out our snapshot videos. They're typically recorded in the morning and put out around midday. Subscribed on the YouTube channel, and then I think you should just get an alert on your mobile or through email. Right, thanks again, guys. Good luck trading this week. Jasper signing out.